morning, everybody. Pope Binary here, and today, as promised, I've got another live trade for you guys. It's essentially a support and resistance trade, but there's some subcontext about risk and reward that I get into that I feel like is a good point to learn from. But before we jump in that, here's the quote of the day. The speculators' deadly enemies are ignorance, fear, greed, and hope. All the statute books in the world and all the rules of all the exchanges cannot eliminate these from the human animal. That's from Jesse Livermore. So without further ado, here is the live trade. Hey guys, I think a really good trade is coming up on the European yen here, or yen here. I always say yin. I don't know why. I think I saw some Japanese movie where they said or it's yin and yang. That's why I say it. But the European dollar and the yen here, I think a really good trade's coming up. And so basically, I'm going to give you my short-term prediction, and then I'm going to go into long-term why I think it's going to be a very profitable trade. So short term, let me zoom in a minute real quick for you guys. So I think there's a nice double top forming in a sense at a nice resistance point that's been tested multiple times. I'm going to go ahead and draw the line in right here. Right, so we can see the market, we rose, we get a strong bearish reaction, we rose, and it's hard to tell, but let me zoom in a little bit more so you guys can see. But this last green candle here, you see how there's a really big wick to the bottom side? What that lets me know is there's lots of bearish sentiment in the market, but somehow the bulls are still pushing it back up to the resistance. Basically, that just lets me know, due to the size of this large wick on this bottom green candle, there are lots of sellers in this market, but for whatever reason, people are still buying the market back. So short term, basically, I think the market's going to fall away. This is 217 on, let's see, it's October 17th. At least 217 Eastern time in America. So basically, if I see any sort of large bearish candle, any bearish trending candle, I'm going to enter an hourly put that will say the market will finish anywhere above this strike price, if that makes sense. So I get this question a lot, and that's where do I place my strike prices? And basically, I give myself comfort room above or below whatever the basis for the trade is. And I hope that makes sense. Let me explain. So, for example, right now we have this resistance point. If I were to make a trade saying the market is not going to break this resistance point, I would place my strike price somewhere up here, right? To give myself a little bit of comfort room, so that way if the market does, in fact come up and test the resistance point, I'm still safe. The only condition in which I lose the trade is if I'm wrong about the market direction and the market somehow finds a way to break through the resistance point, right? So that sets a lot of, favorable conditions for me and helps me win the very high percentage of my trades. So I'm going to pause it, go take the trade, and I'll be right back. Hey guys, jump forward about 15 minutes here. So I just entered the trade. What this purple line represents is this is my strike price. This is an extremely, extremely conservative trade. I believe my order got filled for, I think it was $12 is what I placed it at. I don't know how or why, but somebody ended up taking that order, which is great for me. Hey everybody, we're back, and we are about a minute and 30 seconds away from the expiration period, or the end of the period here that I'm trading. I traded an hour contract. I don't know if I was clear on that earlier. But basically, I just wanted to say this is going to be a win no matter what. And I just want to really highlight, I guess, I want to really point out the benefits of conservative trading. Notice how, right, I thought the market was going to fall away. That's what I thought, but I knew the market, no matter what, was not going to break this resistance point in the next 20 minutes just because there's no catalyst, right? There's nothing to really spark a large bullish reaction to cause, a large uptrend to happen, right? So I knew that. So this is just a perfect example. We can see, let's zoom in a little bit. We can see the market did initially fall away as predicted. That would have been a good scalp move, or a good 5-minute trade, right? And then we see the bulls actually rally back up to the resistance point, but now we're seeing the bears step back in and offer some sort of resistance, if you will, at this resistance point. We can see though that the bulls are actually buying back all the market. But what I'm trying to say is essentially the market is, was not able to convincingly break this resistance point in the 20 or in the 35-minute period in which I had the trade live, which just goes to show why trading around resistance points are so strong. So obviously the period just closed out. This is a win for me. And one last thing I want to talk about risk reward. I think I mentioned it earlier, but I'm risking $88 to make $12. Right? You think about the risk to reward, and that's terrible if you were trading, actual position holding. But for options, I feel like conservative trading is 100% the way to go. So if you think about it, 12 divided by 88, that's about 1 over 7, which comes out to be about 14%. So I'm essentially just made 14% return on my investment, right? If I could tell you, right now, if you gave me $1 million, you could make a 14% return on your investment. Would you take it? And the answer is 100% yes, right? That's $140,000 you would make on that $1 million, right? You have to think of terms of percentage in terms of contracts. I think I only traded 1 or 2 contracts. Let's just say 1. So I only traded a single today, but that's still a 14% return on money. I vary in position sizes. When I find, I really only trade a lot of contracts. For example, last Friday I traded 10 contracts, essentially risking $700. I did that because I knew it was going to be a win 100% of the time, right? That pattern I was so familiar with that I was comfortable trading 10 contracts. This today at least, I don't feel like trading a lot of money just because, quite frankly, there's no reason to trade a lot of money on this trade. There is, the if we're statistically speaking, there is the 15% chance that I am going to be wrong. And against that risk to reward, I don't want to be wrong. And as we can see, the market is finally breaking through this resistance point. So if this trade had gone, another 30, 40 minutes, I might be, sweating a little bit afraid of the market actually breaking this strike price. But I knew that in the next 25 minutes, the market would not break the strike price and that I would be okay to enter such a safe trade. So I hope today not only you see kind of a basic support and resistance trade, but you start to, consider what the real goal of risk to reward is in option trading. And in my opinion, if you take out of the money trades, you're actually gambling, not trading. For me, I'm just being a very conservative, very safe trader and growing my money slowly, if that makes sense. And you may have the question now of, does this work in the long run? Does such terrible risk to reward work in the long run? And I can tell you, over the past 2.5 years, I'm not going to get into numbers, but I've grown my my account by a very, very large margin. Right, it's been tremendous this past 2.5 years in terms of profit. When I'm applying for internships and I show them my actual account compared to what I started with, they're like, "That's unbelievable." They essentially, when I first tell them, they're like, "That's unrealistic." And the only way you could do that is if you're risking a very large portion of your account every time. And when in reality, I just have a very, very high win percentage that is very conservative. Right, and I hope that makes sense, but yeah, so basically I'm just trying to say, play your cards safe rather than riskier when it comes to options. When it comes to actual position holding, if you're watching this channel trying to learn how to do Forex, I did Forex for a little bit when I first started, and then this past 7 months I kind of used some of the passive income I was getting from YouTube and just put some money into that. And I just found with Forex, you actually have to be a risky trader. You have to take riskier positions in order to make money because, well, quite frankly, you don't have the luxury of, entering if you were Forex trading, you would enter a position up here, which you cannot do unless the market actually rises to this point. So if you're trying to do Forex actual position holding, don't do terrible risk to reward. Risk to reward, honestly, is the single-handedly most important thing you have to focus on. But if you're doing options trading, what I'm trying to say is risk to reward is not as important as you would think due to the nature of options themselves. But that's basically the trade for today. I hope you guys enjoyed. If you have any comments, if you would like to ask anything, either shoot me an email or drop some comments in the comment section. Sorry about the stutter there. I had someone in the room that just walked in. But yeah, so Pope Binary's out.